Okay, I think we're officially live. Our apologies, everybody. We got started a little late. We had some technical issues, but now we are back up and ready to go. And with that, I just want to say hello to everybody joining us for today's Charla Financiera. We're so happy to have you here. In case you are not familiar with our charlas, that means it's your first time here. Welcome. Let me give you a little bit of background. Our Charla Financieras are a weekly financial education presentation presented by the engagement team at MAF, where we aim to provide you with different types of financial information, education, resources, whatever it is that you want to call it, that can hopefully provide you even just a little bit of help on your financial journey. The topic that we're going to be covering today is a topic that is always a topic that is brought up when we're having financial coaching clients, when essentially people are speaking a lot about their goals. And I feel that's a very common goal that many people have, and that is buying a home, being a homeowner. So that's exactly what we're going to talk about today. We're going to talk about how you can take the steps to prepare for homeownership. Essentially, we want to give you a quick snapshot of what does that process look like and what are different steps that you can take now to prepare. Or even if you're like, hey, Efrain, hey, Alex, I don't necessarily have the ability to buy a home right now, but I would love to have the knowledge because I do have that goal. I do have that aspiration. So when I am ready, I want to be able to take that leap as best as I can. So we're going to go ahead and talk about that. Before I get started, I want to say hello to everybody joining us and hello to my co-presenter today, Alex. Hola, Alex. How are you doing?
Good. Thank you so much for that great explanation that you gave about this, like you said, great topic of wanting to buy a home. We all know that it's the American dream, and that as a financial coach, it's definitely something that I hear a lot from my clients.
Definitely. Okay, let's go ahead and get started. I'll leave it with you, Alex, so you can introduce yourself.
Thank you so much. Like I said, my name is Alex Torres. I'm a financial coach here at MAP, and what that means is that I am here to kind of help guide you and just meet with you with whatever questions you may have, talk about your goals, whether it is something like buying a home, or simply maybe you just want to know a little bit more about credit, whatever it may be in terms of your personal finances. I'm here to help you with that. A little bit later on in the session, we will give you some information how you can make an appointment with a financial coach. And I truly hope that you take advantage of that service that MAP offers. It's great, it's free. And like I said, we're here to meet with you one-on-one to help you talk about those goals, those dreams, whatever aspirations you may have. Now back to Efrain.
Awesome. And guess what, Alex? We're able to fix it and we're live on Facebook.
Perfect.
Now. Awesome. So we're good to go, y'all. How's it going, everybody? My name is Efrain Segundo. I'm the Financial Education and Engagement Manager at MAV. I'm fortunate enough to work with an amazing team to help produce these events and a lot of different efforts that we have to be able to just share financial education information with the community. But even better than that, just to have the opportunity to connect with community. So we would love to hear from you. We have our chat box pulled up. We have the question and answer. If you're joining us today on Facebook, we have the comment box pulled up. So if you guys have any questions, feel free to drop them in the comment box, drop them in the chat box, and we'll be happy to just converse with you and share whatever information that we can. Thanks, Alex.
Now let's talk a little bit about who MAF is. So we're a nonprofit based out of the Bay Area of San Francisco, and we're essentially on a mission to help people become visible, active, and successful in their financial lives. And we do that by providing products such as our lending circles, which is a great credit building product, and also offering things like financial coaching to help people do exactly that, become visible, become credit visible, become active in making those decisions and educating themselves on finances so that they then be successful in their financial lives and achieve things like home ownership if that's one of their goals. So MAP really does strive to help people that are underrepresented and underserved become visible and active.
And we want to give a quick disclaimer for everybody joining us today. We want to let you know that the information in this presentation is for informative purposes only and should not be considered legal, tax, or financial advice. Everyone's financial situation is different, so please consult a trusted legal, tax, or financial advisor.
Thank you, Frank. So what are we going to review today? First of all, we're going to talk about the importance of home ownership. Why is this something that so many people want to accomplish and want to do? We're going to give you a guide for home ownership, kind of what are those steps that you need to take? What can you work on now? We're going to give you some resources, some places that you can reach out to help you along your journey. And finally, we're going to do a question and answer session.
Awesome. So with every chatbot that we start, y'all, we want to just get a feel of the room for everybody to join us so we know who's in it. So we want to launch our first poll of the day. And that first poll is with a simple question. If you're joining us today on Zoom, go ahead and answer the poll that just came on your screen. If you're with us today on Facebook Live, you can go ahead and type your answer into the comment box. And the question is, how familiar are you with today's topic? So how familiar are you with the process of ownership or preparing for home ownership? Right? So maybe you're very familiar with it. You're like, hey, I'm actually a homeowner, or somebody in my family was a homeowner and I helped them with the process. So I'm very familiar. I pretty much know what it's going to entail. Or you say, hey, I'm familiar with it. I've studied about it, or I've read about it. I've seen some videos online just because I was interested. Like, hey, how does that exactly happen? Or this could be not familiar. This can be completely brand new, and that's completely fine as well. If you have no idea, we're going to give you a good scope of the land, so to say, about the actual process today and let you know about the different steps that you can take. So thank you so much to the people that responded. I see here that the majority of the group has somewhat familiar with it, which is great. We're going to go ahead and share a little bit more information. So hopefully you can become very familiar about the process.
Thank you. Now I'll let Efrain here guide this activity. He's really great at visualization, so I'm going to let him guide this activity for you guys.
No worries. I think one of the great parts, y'all, and one of my favorite things about goal setting, right, is that you have to really visualize the goal as best as you can and be as clear as you can, because when you have the most specific goal as possible, right, you have a much greater chance of attaining it just because you have a much clearer vision of what it is that you want. Especially with homes, that's a really, really big endeavor. And that's a really big goal for people. And it's a great achievement once you reach it. So we want to just take a moment to help you visualize your ideal home. So go ahead and take a moment. You can go ahead and close your eyes. You can leave them open, whatever you prefer. But take a deep breath. And we want you to imagine your ideal home. If you're a first-time home buyer, what's your first home going to be like? What would you like it to be like? So what is going to be the color of the house? What's it going to look like when you're walking by it, when you're walking in front of it, when you're walking on the side? How many rooms are there? How big is your house going to be? Is it going to be a single story? Is it going to be a double story, right? How many windows do you imagine it having in the front? Is it going to be a deep house, a short house? What do you imagine? Also, can you smell something cooking? Do you have a wonderful kitchen just like you always wanted? Do you have that island that you've always wanted? Or maybe you don't like islands, you want an open kitchen. Depends on what you like. And is there a yard, right? What do you imagine the space for you to be like? Are you going to utilize your yard? Or are you going to prefer much bigger rooms over having a yard, right? You prefer a much bigger garage over having a yard, whatever you like. The whole point of this, ladies and gentlemen, is just to give you an opportunity, if you're going to be preparing to be a homeowner, for you to have that vision, right? Most importantly, because when you go start looking for homes, right? If you don't have a vision, it's going to be very easy to get, I don't want to say confused, but you're going to get distracted because you're going to see this, you're going to see that, you're going to see this, you're going to see many, many different types of homes. But if you have a clear vision as to what it is that you want for yourself, maybe what you want for your family, what you want for your present or for your future, this will definitely help you guide you along the way. So please don't let this be the last time that you do this. As you're going through the home ownership process, your thoughts may change, and that is completely fine. If they do, always just make sure to revisit it with yourself and come to terms with, like, what is it that I want for myself or my family, and what is the best way that I can achieve that? So just take a moment. Always remember to take a moment whenever you can. Thanks, Alex.
Thank you so much, Efrain. This is a great activity. Now let's talk a little bit about how the Latinx community is shaping the future. So we have some data here. Over the next 3 decades, 70% of new homeowners will be Latinx or folks of Latino heritage, which is just amazing to think, you know, how much of this space we're going to be taking up and how we are the folks that are going to be buying the majority of homes. So it's definitely important that we have the resources and the information necessary to be able to make the best decisions moving forward.
Awesome. So we're going to go ahead and get started with the importance of home ownership. Alex, if you got us to our next slide. So we want to define what we consider, what many consider home ownership. Home ownership is considered when a person is the owner of a property that they live in. This home can be a single family home, an apartment, condominium, or a housing cooperative. Housing is a fundamental human right where everyone deserves a right to live somewhere in peace with security and dignity. So one thing that we want to mention here, ladies and gentlemen, is the key point of the owner of a property that they live in, right? So a lot of the process that we're going to go over today is from the perspective of you buying a home that you want to consider your residence. There's also other processes. People buy homes not to live in them. People buy homes as an investment property. They'll buy the home, they'll own it, they'll sell it, they'll rent it, they'll do other things. And that process is a little bit different. Same core basics, but it's a little bit different than buying a home that you're going to live in and stay in. So we want to just make that differentiation in case you're interested in investment properties and things as such. You're not going to get too much of that perspective today. We were going at it from the perspective of somebody being a first-time home buyer, and they're not familiar with the process and they want to know exactly what it is. So we want to just set that context up as we go ahead. Back to you, Alex.
Thank you. So we're going to go over some benefits of homeownership. First of all, we're talking about the ability to purchase a safe and affordable home, the ability to hopefully build generational wealth, something that you can pass on to your kids, to your grandkids. It also adds a component of financial security. So those are going to be the three main benefits of homeownership.
Mm-hmm. So now we want to ask people who are participating with us on Facebook Live and today here on Zoom, why do you want to buy a home, or why are you interested in this chat live specifically in becoming a homeowner? Go ahead and let us know in the chat. It could be now, it could be as we're progressing through the chat live, whenever you prefer, but just go ahead and let us know, like, why do you want to buy a home, or why are you interested in buying a home? And we'll go ahead and revisit those answers a little bit later. But let me pose that question to you real quick, Alex, because I know that you're showing interest in buying a home. What is one of your main reasons for wanting to become a homeowner?
I think I definitely want more space. We're looking at intergenerational living, so multi-generational home. Myself, like a lot of other people in my situation, have a parent living with them. So I'm looking for a space where there's room enough for an entire family. So that's one big reason. Definitely, I want to feel like something is mine. You know, I was a renter for years, and that was very convenient. There's definitely some convenience in renting, but I want to feel like something is mine, like I can paint the walls, or I can, you know, do whatever I want without having to run it by someone. So those are definitely some of the reasons why I want to
love that. I love that, Alex. I love both of your reasons, especially the second one. I grew up in apartment buildings, very compact, very big apartment buildings. And I always remember thinking like, oh, like, why can't we do this, or why can't we do that? And my mom saying, oh, because it's not, because we have to tell the manager that that's the owner. We can't necessarily just paint it or switch something, right? I think the freedom, and I think the freedom is the really big reason why a lot of people want to buy their homes, because you have the freedom to do whatever you like. That is your property. And I feel like that's a really, really good reason to want to buy a home.
Absolutely.
So thank you so much for sharing.
Of course. So we also want to know where you are on your journey towards home ownership. Some people are at the very beginning, where they're barely beginning to evaluate their financial snapshot. Can I afford to own a home right now? Do I have enough in savings? Are you already past that, and are you starting to gather some documentation? All of those things that they might ask for you when you go and apply for that loan. Are you already in the process of getting pre-approved so you can start looking at property? So you can start putting down bids. Are you finding a realtor? Have you gotten some referrals of some folks that you know you might want to work with? Are you looking for a home? Are you starting to visit these open houses? Are you starting to check out some properties in your area that you might be interested in? Are you at the point to where you're making an offer? You found a property that you really like. It's time to put in that offer. Maybe you're under contract. You know, you've chosen the property, you've gotten the pre-approval, you've put in your bid, or are you already planning for the future? So where are you exactly? I myself, I'm in between A and B. You know, we're getting some of our financials in order. And then the next step is going to be gathering all of our documentation. So everyone might be in a completely different step, and that's okay.
Absolutely. And just to share, like, this is a process, right? And it's there's no set guideline to how long you need to take at each step. So please keep that in mind, right? And you could be looking for a home for as long as you like, because you want to make sure it's the perfect home for you, right? You could be evaluating your financial snapshot, which is the first step, that could take years because you already have the goal and you say, hey, I need this set amount of money and I need my credit or my financial situation to be this. And I have a plan to get it there in, let's say, 2 to 3 years. And that is completely fine. So just know these are just steps, but there's no time order to these steps. The time order is what makes sense to you.
Exactly. I think depending on what's going on in the world also depends on how
Absolutely.
long you're out of step. For a while there weren't enough homes. So maybe looking for a home was taking a lot longer than it would have normally because there just wasn't enough properties out there. So a lot of things depend on where you are and how long you're going to be at that step.
Absolutely. Great. So we're going to cover a guide for homeownership, and we're going to cover all of these different phases, these different steps in the process. And we're going to start with number 1, evaluating your financial snapshot. So what exactly does that mean? So when we say you want to evaluate your financial snapshot, there's a couple different components that we want you to look over. Number 1, and it's so important, and if you are familiar with the charla financieras, we talk about credit a lot because credit is super important. So many different parts of your financial life, with home ownership being one of the most important. Typically, what holds people back from being able to buy a home is 1, saving up for a down payment, and we're going to talk a little bit more about that. But typically, it's your credit score, right? So you want to get your credit to a good enough place so you can go ahead and get approved for the best mortgage possible. And we're going to talk about that as well. But number 1, let's focus on your credit, review it. Where is it at? What should I get it to? Number 2, it's review your debt to income ratio. What is a debt to income ratio? Essentially, it means how much money do you make a month and how much of it do you have to pay back in debt? So debt, ladies and gentlemen, it's considered anything that you have a bill that you owe a set amount to that you pay every month. This could be a credit card, right? Because you carry a balance on it. This could be something like a car loan because you took out a loan to pay it back. You're paying it back monthly. It could be a personal loan. Maybe you borrowed some money from a bank or a lender and you're paying that back monthly. Essentially, how much of your money goes back to debt every single month? And you want to have that as low as possible. There's actually a percentage, which is 30%. You want to have less than 30% of your money go into debt every single month. And the smaller that debt is, that shows, hey, this person has very, very little debt. That means they're able to take on this big payment that might be their mortgage. And it shows that you have a much, much better ability to pay that payment. And it's a really good sign when you're applying for a mortgage, but we're going to talk about that as well. But essentially, review that. How much am I making each month? How much of it goes to debt? Number 3, review your savings. As I mentioned just a little bit ago, typically one of the biggest things that holds people back from buying a home is the down payment. And it's also closing costs. That's something that people try to forget as well. Essentially, it's the lump sum of money that you're going to need to make at the beginning of buying a home, which is typically 3.5% is the least amount of money you could pay. A rule of thumb that I would say is 5%. You want to have 5% of whatever house you're trying to buy. So if the house costs, let's say it's $100,000, you want to have $5,000 ready to go, right? The 5%. So you want to review your savings because most people will dip into their savings or they build up their savings to get ready for that initial lump sum that they have to pay. So that's definitely it.
Yeah. Now let's talk a little bit more about reviewing that credit score. So if you've been to any of our other charlas, you know that a credit score is a 3-digit number that ranges anywhere from 300 to about 850. When you're looking for a mortgage loan, lenders are going to want to consider that credit score because, again, that sort of guides them and how creditworthy are you? How trustworthy are you? Are you going to be able to make this payment? And that kind of indicates to them what type of offer they're going to give you on that mortgage rate. So a credit score of 700 or higher may give you more opportunities during this process. Now, we do obviously always want to plug our financial coaching in there. If you want to know what your score is, if you want to kind of see where you are and if there are strategies to help you raise that score, or if you want to know if your score is already, pretty good and you can go ahead and move forward with the process, definitely consider meeting with one of our financial coaches to help you sort of review that score if you don't know where it is, even if you just want to look over your credit report, just so that you know what those lenders are looking at.
Awesome. So then the second thing we want to review is, like I mentioned, your debt to income ratio. As we mentioned, the majority of home buyers obtain a mortgage loan to pay for their homes. So typically, There's options to buy a home, ladies and gentlemen. You could pay a home lump sum. So if you happen to have whatever amount of money saved up, you can just go and purchase it. The majority of people have to take out a loan with the bank to help them pay for it, and that's called a mortgage. So when you want to apply for a mortgage, the lender who's ever giving you that mortgage is want to look at your debt to income ratio. It's called DTI, and they want a debt to income ratio of 35% or lower to increase your chances of being approved for that loan. Why does that happen? Because imagine if, let's say somebody asked you to borrow money and they say, hey, like, can I borrow some money? And you know that that person had a lot of money, people that they're paying back money to, and that they're really, really tight on money, right? You might want to let them borrow that money, but you know there's a really good chance that you might not get that back, maybe at the time that they said they would, or the amounts. But most importantly, you don't want to put that person in a tight spot. You don't want to say, hey, I don't want to add more debt to the debt that you already have. I would much rather prefer that you reduce that debt to get yourself in a comfortable spot, and then we can go ahead and reconsider this. Essentially, that is what the bank is thinking, that it just makes them a lot more comfortable lending you that money if they know that you're handling your debt or is at a lower level. So you want to calculate your debt to income ratio by adding up your minimum debt payments per month and dividing the amount by your income before deductions. So that's a really good point. I want to make sure everybody knows that. It's not your net income. Your net income is what you get in your paycheck every single month or every single 2 weeks. It's your gross income. And that is the total amount before taxes are taken out, before Social Security are taken out, before your benefits are taken out. It's the gross income. That's going to be the amount that's going to be considered. So just keep that in mind when you're trying to calculate your debt to income ratio. I'll pass it over to you, Alex.
Thank you so much. And we have a quick example of that here. So here we have Francisca, her income monthly, her gross income is $6,000 a month, which includes her wages, her tips, and a side business that she has where she cleans houses, one to three houses a month. Now we know that that income is $6,000. She's calculated her debt, how much of that money she's got to pay back on bills, and that's $2,100, including her car loan and her credit cards. So after doing the calculation, dividing 6,000 by 2,100, and then multiplying that by 100%, we see that her DTI is 35%, which is right where it needs to be. Anything 35% or lower is considered a manageable debt to income ratio.
Awesome. So the next thing we want to talk about, ladies and gentlemen, is reviewing your savings. So building up your savings will provide you with the opportunity to make your own decisions without settling for less than you want. So set a savings goal of 5 to 20% of the home value as your starting point. Having money set aside will help you in reaching your goals. So let's talk a little bit more about this. You definitely want to save some money, and you want to set a savings goal essentially by looking at where is it that you want to live, right? So if you look at, hey, you know what, I want to live in this city, the house that I want at least a 3-bedroom house. And then you can go online or talk to a realtor and say, okay, like, what does the typical 3-bedroom house go for in this city? And then you're going to discover, okay, it goes for $300,000, $400,000, whatever it might be. So, okay, it goes for a set amount. And you know, okay, I need to save up at least 5% of that. So if the house costs $300,000, I know that I need to save up $15,000 and have that ready to go. So you can adjust that. If you know 5% is the minimum you can save, there's your minimum goal. But if you're able to build up your savings over time and you say, hey, I'm not finding the house that I want, so I'm going to wait a little bit. I'm going to keep saving. I'm going to have more than 5%. That's going to open up more opportunity and options for you, because now maybe you say, hey, the $300,000 houses, I'm not really liking them. I have a little bit more money saved up. I think I can buy a $400,000 home, and I have the money available for a down payment. So just know the bigger your savings are, the more options you're going to have. And you're not have to be limited to say, hey, I have to take this home because that's simply what I can afford with my down payment right now, even though I can afford much more of a payment over time. So just keep that in mind. 5% is a really good goal. 20% is an optimal goal, because if you were up to say, if you can pay 20% of your house payment in what as a down payment, that is great, because that means that it's a much smaller loan that you're actually going to take out, and your monthly bill will be lower. So just know there's trade-offs. You could pay less now to pay a little bit more monthly. You could pay more now to pay a little bit less now monthly. So no matter which route you go, choose the best route for you and just keep your savings in mind.
Exactly. Thank you. So the second step to the first time home for a first time home buyer would be gathering documentation. So what are those documents that you're going to need once you actually start that process? So they're very simple. You're going to need an ID, a valid ID. Perhaps if you don't have a social security number, you might need your ITIN number. If you do have a social security number, then that's something obviously that you're going to need. Perhaps a passport. Let's say you don't have a driver's license, you can always use your passport or a consulate card. So these are just different types of IDs if you don't have a traditional form of ID, such as a driver's license. As you can see, we do list ITIN, so that lets you know that even if you don't have a social security number, you're still able to buy a home. And I know that we're going to touch on that a little bit later. But this is just some basic documentation to basically prove who you are and that you are who you say that you are, so that folks can check that credit and make sure that you have everything in line and ready to buy that home. We're also going to need to be able to verify income. That could mean the last 3 years of your tax returns, or maybe the last 3 years of your W-2s. Last 3 months of pay stubs. Can you show that you've been employed for the past 3 months? Last 3 months of bank statements. Let's say that you don't receive pay stubs. Let's say that you're paid in a different way and you don't have check stubs. If you can prove income by showing your bank statements, that would also work as well when we're talking about 3 months worth.
Awesome. Yeah, would you mind going back to the slide
Sure.
right before this, Alex? I just want to mention something with income verification. That could be something that could also block or just makes it a little bit more difficult in order for somebody to buy a home. And the instance that I want to say is, let's say you work, like you have your own business, right? Typically, if you have your own business, you might not have a W-2, but you're going to have other forms of income verification. That's why your tax returns are so important. I've definitely met people in instances where they say, hey, like I have my own business, I have a side hustle, whatever it might be, and they get paid in cash. But the thing when they get paid in cash is that they don't necessarily pay taxes on it. So there's no record of them making this income. And that could be a little bit of a difficulty if you have the goal of buying a home one day. So essentially, income verification, you want to show, hey, I'm making this income. It's steady. Here's the proof. You can see the record of it. So always just keep that in mind, because I know a lot of our viewers have those side businesses, right? They're self-proprietors, they have LLC, whatever it might be, right? So just make sure that you keep that in mind. And it doesn't necessarily have to be W-2. It could be your tax returns. It could be your bank statements. It can be a lot of things, but you want to have essentially a paper trail of the money that you're making, and that you want to report it, pay taxes on it, because at the end of the day, you'll be able to set yourself up to get a mortgage. Like I mentioned, getting a mortgage is one route to buying a house. Some people save up the money, all the money they need, and they just buy the house cash. That's also an option. We just want to make sure that you know the difference between the two and you can prepare yourself as best as possible.
Thank you.
Awesome. So then we're going to talk about the next step in the process, and that is getting pre-approved. So what exactly does that mean when you want to get pre-approved for a mortgage loan? So a mortgage loan is a secured loan where you can have available funds for by proving your home as collateral for the lender. Financial institutions such as banks, credit unions, and non-bank mortgage lenders may offer different plans to help you finance a purchase home. So what does all this mean? It means that when you go ahead and purchase a home and you want to use a mortgage or take out a loan for it, that means that you can apply, you're going to show your information, and then they're going to provide you a loan to buy that house. But that loan is secured by the actual home. Secured means that it's backed up by the item. So if for any reason you are not able to pay the monthly payments, or you fall behind to a certain point, that means all they do is take the house away, right? It's the same thing with cars. When you purchase a vehicle, a car loan is secured by the vehicle. If you don't pay the car note or the bill monthly, they take away the car, right? So just keep that in mind. That is what a mortgage loan is. And essentially, you'll be able to get pre-approved for a mortgage loan by going ahead and presenting all your information, your documentation, your income, all that good stuff to a lender. And you basically say, hey, check me out. I have everything that you require for me to have a mortgage. Do you guys think I'd be a good fit? They'll go ahead and look at all your info and say, hey, you know what? Alex is a good fit. She has the income. She has all the verification. She has good credit. We're going to pre-approve you, and they'll let you know, we're going to pre-approve you for this amount of money. So they'll say, hey, Alex, we're going to pre-approve you for $500,000. And now Alex can go and take the next step, knowing that she, if she wants to, has access to those $500,000, and she can take the next step. So that's just a little bit of a synopsis as to what it means to have a secure loan and what it means to get pre-approved for a loan.
Now let's talk about different types of mortgages. First, we have the conventional mortgage loan. Adjustable rate mortgages, where those rates are going to fluctuate throughout time. Fixed mortgage rates, where that rate is going to stay the same throughout the duration of the loan. Government issued mortgages, which sometimes come with certain advantages. And then jumbo mortgage loans. Anthony, could you explain to me a little bit more about a jumbo mortgage loan?
A jumbo essentially when it goes past an amount. So it's just a bigger amount. So typically mortgage loans will have a max that they can reach. And this will be in your county, most likely in your county. They'll say, hey, in this county, the biggest loan that you can take out will be $800,000. So that is through a conventional lender, but you can go through private lenders and they'll say, hey, we'll give you the loan. If you really want to buy that $1.5 million house, we'll give you the loan for $1.5 million. It's just a much bigger loan. And typically it'll have a different kind of interest rates than the ones that are available through all the other ones. So that's all it means. It's just a much bigger loan that goes above the county limits that you have.
Perfect. Thank you.
Awesome. So then we want to talk about the difference between an FHA loan and a conventional loan. So a FHA, that's the Federal Housing Authority, that is a government-backed loan, and they essentially help regulate the mortgage loans that are issued in the United States versus a conventional loan. So here's a little bit different. Since it's a Federal Housing Authority loan, it's federal programming, they are providing a little bit more assistance, but there's a trade-off. Let me explain here. So for example, let's say you have a low credit score, then you might want to go for an FHA loan because the minimum credit score that you need with them is 580. Or let's say you have a bank, you bank with one of these big banks that's all over the United States, and they offer mortgages. That would be considered a conventional loan, right? With them, you need to have a little bit better credit in order to get approved. So for example, a conventional loan, you need like a 620 and above, right? FHA loan, all you need is a 580. Then we go into the down payments. So for an FHA loan, since they're making it easier with a lower credit score, you might have a little bit lower credit. That means that they want a little bit more of a down payment in order to keep that loan. So typically they'll want 3.5% of whatever the house value is. Versus a conventional loan, they'll take 3%, which is actually less. Since you have higher credit, they'll cut you a little bit more slack and they'll say, hey, all you need is 3%. And then we have long-term goals. So a FHA mortgage insurance is not cancelable. What does that mean? There's a thing called mortgage insurance, ladies and gentlemen, that you'll pay. It's essentially a fee in your mortgage that you'll pay. For an FHA loan, you'll pay that for the entire term of the mortgage. So you have 30 years, you'll pay that the whole 30 years. But for a conventional loan, you will go ahead and stop paying that when your home equity reaches 20%. What does that mean? Essentially, once your home grows a fifth in value up, then you'll go ahead and be able to cancel that. So what is a fifth in value? Let's say you have a home that's $100,000 when you bought it, and then years have passed and now your home is worth $120,000. Since it went up $20,000, that's 20%. You'll go ahead and stop paying that mortgage insurance, which is typically around $100 to $200 off your payments, which is a plus, especially when you look at the term of like 30 years. So if you're looking at keeping a home, like mentioned, beyond 5 to 10 years, consider a conventional loan because you'll start saving that money once your home equity goes up. So as you can see, if you're somebody that, hey, I really want to buy this house, my credit isn't so good, but I have the income and I think I can do it now, then you might want to go FHA. And there's also different kinds of programs that FHA offers. Down payment assistance. They have they also have programs for people who participate in agriculture. They have various different programs and all around assistance helping people get into homes. But if you say, hey, you know what, I have good credit, I have a good amount of money to put down for a down payment, then you might want to go conventional because you would save more money in the long run. It just depends at which stage that you are and what kind of urgency you have to get into a house. But hopefully this sheds a little bit more light on the two different kinds of loans.
Thank you, Frank.
Mm-hmm.
Now, I mentioned a little bit before about mortgages for ITIN holders. So we get that question quite a bit. Can I buy a home if I don't have a social security number? Can I buy a home if I only have an I-10? And the answer would be yes. If you have an I-10, you can get a mortgage directly from certain lenders. Not all lenders are going to be open to offering you a mortgage, but there are definitely some out there that will. The first question to ask lenders is whether they offer mortgages to I-10 holders. Now, sometimes it can feel a little discouraging when you hear no's, but I promise you there's people out there that are going to tell you yes. So homeownership programs with nonprofits such as the Neighborhood Assistance Corporation of America, or NACA is what I call it, and can also help you connect that to lenders. So definitely do your research. There are going to be folks out there that are able to help you and offer these mortgages to folks with I-10.
Absolutely. Thanks, Alex. All right, so now we want to cover in the step 4, and that's finding a realtor. So what exactly is a realtor? Who is a realtor? So a realtor is a licensed professional who will represent you as the buyer in the real estate transaction. They will help show you the homes and prepare purchase contracts. They will interview potential realtors to verify their credentials and to ask for client referrals to help you decide whether they're right for you. So essentially, y'all, when you're buying a home, right, you essentially get representation. You get somebody to represent you, and the person that's selling the home typically gets a realtor to represent them. So it's almost a middleman, right? It's almost like getting a lawyer for a house. It's somebody who's going to go ahead and say, hey, like, I represent Alex. Alex is interested in buying this, this, and this. So let me go ahead and find the options for her. And then also they're the people who are going to communicate and say, hey, Alex, so how do you like this house? Is it a thumbs up? Is it a thumbs down? Alex can say, hey, you know what? I would take it if it was $10,000 cheaper. Alex doesn't need to necessarily go to the person selling it and say, hey, can you give it to me cheaper? Instead, Alex can tell the realtor can go ahead and communicate with the seller's realtor, and it's essentially representation. So a realtor, ladies and gentlemen, can be a very beneficial relationship because of various factors. And that's why we mentioned here that you want to go ahead and ask for client referrals, because you want to make sure first and foremost that this person is trustworthy, right? Has this person helped other people buy a home or sell their home? Are people really recommending them, say, hey, I had such a wonderful experience with this realtor, you should check them out, they were super helpful, right? The better reviews, the more reviews they have, the typically better experience that you're going to have. But also what I've learned is that realtors, especially if they've been around for a while in a certain area, they know that city or that area very well. So they might know, hey, I know somebody who's selling this house. They haven't put it on the market just yet. But if you're interested in checking it out, I can go ahead and connect you. Essentially, it's just the knowledge, right? It's the experience and the knowledge that you pay for. So you might have a realtor who is brand new to the game, and that's completely fine because they just might be the best fit for you. But you also might have a realtor who has a lot of years in that specific city where you're looking to buy, and they just know it like the back of their hand. And they're able to negotiate a better price. They know the different conditions that go into living there. So essentially, please take your time when choosing a realtor. Don't go maybe with the first one. Consider different options. Ask them questions. Ask them, hey, how many houses have you sold here? What kind of difficulties have you had? Why should I choose you? Ask them as many questions as possible because 1, they want to represent you, and 2, it's a big transaction. So you want to make sure that whoever is representing you is adequately prepared to go ahead and do it like to the best that they can. So just know a realtor is an important person in your home buying experience. So just do your best to choose the right one for you.
Now, the next step that we're going to be looking at is actually looking for a home. Now, there are several things that you want to consider when you're looking for a home. You want to work with your realtor to find homes that meet and fit your needs and your budget. So remember the following items. Price. How much does the home cost? Is it within my price range? Is it something that I can actually afford in the long run? Look at the housing condition. Is this home in good condition? Is it going to need tons of repair? Because you have to also consider that when you're considering the price. Maybe the home is inexpensive, but it needs a massive amount of repair, which is essentially going to raise that price. Or maybe the home is already expensive and it needs repair, so now it's even more expensive. So those are some things to consider. Location, is this in a good location? Is it an upcoming location? Is this location headed in the wrong direction? Does this work for me, for my kids in their school, for me and my job? All of those things are going to be important too. Is this where I want to be? Also, safety. Is this a safe place for me to be? Is it home in an area where I'm going to feel safe and secure? All of those things are going to come into play when you're looking for that home. Remember, if you're unable to afford a realtor, you can always consider navigating through the process by yourself by searching real estate listings online. Most real estate listings will give you like crime data for a certain neighborhood. They try and give you as much information as they can on that post so that you can be better informed.
It could also be safety just with the environmental things, ladies and gentlemen. It could be like, hey,
Mhm.
this area is very prone to snow. So that causes different kinds of conditions. This area might be prone to tornadoes, to flash floods. So there's just different things that you have to consider when bringing safety into your mind. So just try to look at the best. And also something I'd recommend y'all that I did is if you have an idea of some place where you want to live, ask the neighbors of the house and be like, hey, I'm really interested in this house. I knocked some doors and hey, what's it like living here? Is there any issues that you might see? And one, that'll give you a perspective of the neighborhood, and two, it'll let you know what kind of people live there, because you might want to take that into consideration too as you're looking for a home. But also, when
I've
looking at,
also heard, I'm so
go
sorry. I've also heard, go to the neighborhood at night. Seeing a neighborhood during the day is very different than seeing the neighborhood at night or over the weekend, just to kind of see how is it? How is it all the time? Is the street super busy? That's something to consider if you have pets or
yeah,
children. Is it by train tracks? I used to live in an apartment that was right behind train tracks, and they were so loud, and it wasn't something that I had considered until later on. All of those little things are things that you want to take into consideration.
is there parking? And you're like, hey, is this street full of cars? Am I going to have enough parking for my vehicles? There's a lot of things to consider. So just imagine yourself living there, like we mentioned earlier, and see, hey, what exactly would I want to know? Awesome. So we want to have you consider a couple different more questions when looking at what type of home. The number one is what type of home. So being a homeowner, ladies and gentlemen, doesn't necessarily mean that you own a super big house, right? Being a homeowner means that it's yours, it's in your name, it's yours to do whatever you like. And it's different kinds of homes you could buy, right? You could buy a single family home, which is typically a typical house, right? You could buy a duplex where it's half of a building. You could buy a townhome where it's typically almost like an apartment, right? In a building of apartments, but that's your piece and you can own it. You could buy a manufactured home, which is essentially a home that you can move. People call them mobile homes. You can buy that. That's still completely yours. You could buy an apartment. An apartment is a home that you can purchase in a building, and that's still considered home ownership. So think to yourself, what type of home do I want to buy? Number two is what amenities do I want? Like Alex mentioned, always think about that. Do I want a school nearby? Do I want a park nearby? You're like, hey, I have dogs. Is there a dog park in this city? Right. So essentially think about what type of amenities do my family need? Do I need? And what kind of neighborhood is going to be able to provide that? Number three is, do I need to help with the upkeep of the house? So what exactly does that mean? Is what condition is the house in? Is it very easy to maintain? If I go purchase a townhome in a complex in a street, then maybe that will take very little upkeep because I'm going to have to pay a fee for them to get cleaned up outside to make sure it's maintained. So essentially, to what point are you going to have to contribute to the upkeep of the house? And number four is, do I plan to sell? So that's a really big question for you to ask and say, hey, like, is this going to be my forever home? Then if it is, then you need to worry about that. But if you say, hey, like, you know what, I took on this new job, I'm going to move to the city, I want to buy a home because I don't want to pay rent, but I don't want to stay at this job for more than 5 years. So, okay, maybe I don't need to buy the home that has all the amenities I've ever wanted, but I needed to get at least 75% of what I want because I plan to move in 5 years. Or you say, hey, I've identified a city that I want to live in now because I know it's on the up. It's rising in home values. The city's really growing. I want to live here, but essentially, maybe later I plan on moving back home. So ask yourself these questions: do I plan to sell it? Yes or no, and make sure you incorporate that as you go ahead and looking at homes and plan to buy. I'll pass it over to Alex.
Thank you. Another thing to consider is location. What areas are safe? And like Efrain said, it's not just about like physical safety, it's environmental safety as well. What is nearby? Do I feel secure here? How is my commute to my job? Is your commute now going to be an hour? Is that worth it to you? What is that going to look like for you? What extra cost is that going to add to your monthly expenses? How are the schools nearby? Maybe you don't have any children and you don't want there to be a school nearby. Or maybe you do have children and that's important to you, that your kid's going to walk to school, or that they can ride their bike to school, or you can drop them off on your way to work. All of those things to consider. Is it the school district that you want? Are my resources close by? Are you in a food desert where there's no grocery stores? Or is your favorite grocery store right near you and you can head there in 5 minutes if you need some milk? All of these things to consider. Location is going to be super important. Is it where you want it to be? Maybe it's a new location, but they're going to be building a lot of new things around you. So you want to be there for that. And it's going to be a good area. Or is it a location where businesses are moving out and you have nothing near you? Like, all of those things are things that you want to take into consideration when you're looking for the perfect location for your home.
Yep. The next thing that you want to consider is around the down payment, right? So that lump sum of money that you're going to need. The first question is, how much do I want to put down? So you want to save your savings goal around that question. If you say, hey, I want to save up 5%, so I know I can accomplish this at the rate that I'm saving now in this much time. Or if you're like, hey, you know what, I'm willing to wait a little bit longer. I'm not really in a rush to buy a home, but I want to prepare and I want to save up that 20% down payment because I want to just pay a big chunk of it off and have a low payment. So consider, how much do you want to put down? When will I have the down payment by? So once you have that first question answered, you can begin planning and answer that second question. If you say, hey, I can save 20% of my down payment in the next 5 years, then you have that goal set for yourself. Set a month to it, set a month and a year so you can continue planning for it. Number 3 is, how will I secure the down payment? So you might say, hey, you know what? I'm willing to take on a part-time job, and all the income that I get from that job is going to be to save up for the house. Or we say, hey, you know what? I make enough now to go ahead and save. So I'm just going to make sure that when I get paid, I'm going to put this in a separate pot and I'm going to leave it there because that is the house money. So how will you secure that? And that leads to the last question. How much of my savings can I contribute? And that's the biggest thing, ladies and gentlemen, is that we definitely talk to clients who say, hey, you know what? I'm not able to save that much money a month. And to say the truth, it's not the amount of money, ladies and gentlemen, at the beginning, it's more of the habit. So even if you don't have that much money to save, if you can say, hey, I'm going to save $100 each month, once you build that habit and you're able to increase your finances, maybe you get more income, reduce expenses, whatever that, and you have that habit established, it's going to get much, much easier for you to reach that down payment savings goal. So ask yourself, how much of my savings can I contribute? Right? Even if it's a small amount, do it to get you in the habit of saving and putting that away. So when your finances increase, you already have that habit established and you can continue pace to get there at a much quicker rate. So these are some questions for you to consider on a down payment.
Thank you. Now, again, going back to Francisca. So Francisca is a single mother with 2 kids, 5 and 7, and her kids go to school in the downtown area of Austin. She works as a restaurant manager in the downtown area as well. Her only modes of transportation are going to be public transportation and ride sharing. And she's looking for a home that requires low maintenance. So what type of home makes sense to Francisca? Taking all of those things into consideration that we mentioned before, maybe moving out to the suburbs isn't her best option, right? Because I'll tell you, in Texas, public transportation isn't that great and you're not going to find that in the suburbs. So maybe for Francisca, staying in downtown Austin is her best option. So that might mean that she can't find a single family home. She might be having to buy a condo or apartment or something along those lines in the area of downtown Austin. So taking those things into consideration, it sounds like for her, moving too far away from her job and her kids' school isn't the best idea if she doesn't have transportation aside from public transportation and ride sharing. So all of those things to consider. Do the same thing for yourself when you're looking for a home. What is your situation? What works for you? What is definitely not going to work for you? And then start from there.
Absolutely. Really good points, Alex. Great. So we want to go into step 6, and that's making offers. So this is one of the most exciting parts, and also be one of the scariest parts about buying a home, ladies and gentlemen, is making an offer and saying, hey, I like this house. I want this house. And you tell your realtor, let's offer some money for it and see if they accept it. So what exactly does it mean to make an offer? So an offer is when you determine the max price that you want to offer and negotiate the contract with contingencies. Contingencies are just conditions, stipulations. Like this, but this, right? Contingencies are conditions that must be met to proceed with a purchase transaction. So examples of contingencies include repairs and renovations. So let's say you're like, hey, Alex, I really want to buy your house. I would like to offer you this amount of money for it, but only if you fix the roof. the roof is really old, and I've noticed I don't want to have to pay for a brand new roof job. If you are willing to change the roof, I'm willing to pay the price that you offered. I mean, the price that you set. If you're not willing to fix the roof, I would like you to take off, $20,000, because I'm going to need to fix the roof at that point. That's an example of a contingency. So you can do this when you go and make an offer on a house. You can say, hey, like, I really want this house. And I want this with it. Here's my offer. Ladies and gentlemen, some people even would like to buy a house furnished. Some people will say, hey, I would like to buy this house and I would love all your furniture because I think it's perfect. So I'm willing to offer you this plus a little bit more money if you sell it to me furnished. Or you can say, hey, you know what? I've noticed that the water heater is very old. I would like for you to reduce the price or to replace the water heater before I buy. So all I'm saying is that you have the freedom to make these kind of offers to make sure that you receive the best deal for it. But just know, just like you make offers can get rejected, because a property owner can say, no, you know what? I don't want to do that. I don't want to take on that cost. They could just reject your offer and wait for somebody else to make it. So it's a two-way street. Just know what work with your realtor to make sure you make the best offer possible. Because typically your realtor will have a really good idea as to what kind of offer like will get accepted or denied, and they'll let you know the process as well.
Absolutely. I know it's something that we saw quite a bit, at least here in Texas, where folks that were selling their home with the contingency of a lease back, right? Where they needed still time in the home to find a new home, right? Because homes are just so difficult to find.
Yes.
So they were selling their home, but they were renting it from the new seller for a period of time while they found their new home. So all kind of different things come up when we
This
put down
is it.
offers. And then the last step that we're going to talk about is getting in contract. So what does that mean? So while you're in contract, make sure to conduct both a home appraisal and a home inspection. This means they've accepted your offer, you're moving forward, and you're now in contract. So a home appraisal is when you ensure the home is worth what you are willing to pay. So you don't want to be overpaying for a home that isn't worth what they're selling it for, because at that point you would be losing money. So you want to make sure that the home is at least worth what you're paying for it, if not more. And then you want to also make sure that you're conducting a home inspection. This is where someone not associated with the seller or with you comes over and inspects the home to make sure that there aren't any big issues, or if there are, to identify the big issues with the condition of the home, such as the roof, the foundation, flooring, if there's any termite damage, if there's any mold. You want someone to look it over, because let's face it, when someone's selling a home, they'll paint over mold, they'll paint over rotting wood, and you don't know what to look for. I wouldn't know what to look for.
Exactly.
And these people are trained to find these things. I'm obsessed with watching home inspector TikTok, where they go and they inspect homes, and they do this little trick where they take a little knife and they poke at the wood. And more often than not, the knife goes straight through this freshly painted wood, because it's rotten. The wood is rotten, and they just painted over it. So home inspectors know what to look for. It's definitely something that you don't want to skip. You don't want to skip over that step.
And this is very important, ladies and gentlemen, because if you were to find anything that was wrong with the home, right, you could either just completely back out and say, hey, you know what, this cost is way too big. I'm not willing to put up with this and you could say, hey, I'll still buy the home, but you got to take off a certain amount of money so we can fix this, because you didn't tell me about this. And sometimes sellers will go ahead and say, hey, I didn't know about it either. Let's go ahead and knock off some price so you can fix it, right? And it's very important, y'all, because if you don't have the proper home inspection, it can cost you money down the line. I remember I had an example of the last place that I lived at. I rented like a guest house in somebody's big house. And essentially they bought this house, and then they noticed that the house was sinking. It was actually sinking. If you drop water, the water would trail. And that means that the foundation of the home where it sits on was going down. And many people don't look at the foundation of a home to that extent when they're buying a home. And it turns out this was something very, very deep under the house, but the owner didn't know. He didn't get it inspected to that extent. So this ended up costing him like $100,000 to fix. It was a really, really big expense. Why? Because he just didn't know before he bought it. So this is just, a notice to you that once you get to this point, do your due diligence, hire a home inspector. Trust me, they are worth the money, because even if they tell you, hey, you're good to go, nothing's wrong with this house, that's what you want to hear. Or if they say, hey, you know what, there's a lot of stuff wrong with this house, that's what you want to hear. because you want to make sure you know exactly what you're getting yourself into.
Exactly. Now let's go over some resources. Of course, we have HUD, which is the Department of Housing and Urban Development, an organization that a lot of people have heard of, and they're helpful to discern between what is fact and fiction in the process of home buying. So HUD is a government agency which oversees the regulation of the housing industry and can help you find local resources near you. You can always visit HUD.gov, and it's a very simple web address to learn, or you can of course take a picture of the QR code that we have here on the screen.
Awesome. And we'd also like to connect you to the National Home Buyers Fund, because they're able to help people by providing affordable mortgage loan interest rates and down payment assistance programs, both for returning and first-time home buyers. So visit nhfloan.org. It's even worth exploring, ladies and gentlemen, anything that has to do with down payment assistance. Typically, they have income requirements. So if you have a high income, more than likely you won't be able to qualify for this. But if you're moderate to low income, there's typically programs that you're able to qualify for to help you reach that goal of becoming a home buyer. So make sure you check them out and see if you qualify for any of their programs.
Thank you. And I know that before we also mentioned NACA, NACA, and I'm sure they don't like to be called NACA, but that's what I call them. And they're also a great program, and they're nationwide. So just look them up. It's NACA, and they have some great options as well for first-time home buyers. So after participating in today's chat lab, please rate the extent to which you agree with the following statement. I feel like I learned something new that can provide value in my financial journey. So if anyone will put up the poll here shortly. If you can just answer to the best of your ability, we always appreciate the feedback.
Yeah, ladies and gentlemen, hopefully you're able to walk away with even one small piece of maybe just what the home buyer process was like, the different steps that go into it. Obviously, we know y'all home ownership and the process is really big, and there's a lot of details that go into it. And we definitely can't cover all of that in an hour, but we didn't want to do that. Essentially, we wanted to give you a bird's eye view to let you know these are different steps, give you an introduction, and we want to share that you can connect with the financial coaches so they can at least help you prepare for those steps. So maybe once you get to the step that our coaches can help with, maybe once you want to get pre-approved, talk to a realtor, you'll feel a little bit more better about your personal finances and where you're at to help you get there. So thank you to everybody that participated in our poll. We really appreciate it.
And then we just want to give you a friendly reminder, be kind, compassionate, be kind, patient, and compassionate with yourself the way you are with others. Everyone's financial journey looks different, so comparing yourself to where someone or somewhere else is really doesn't do you any good. You have control of your own financial life, and finally, it can take months, days, or even years to achieve your financial goals. You know, as someone who is actively in the process of buying a home, I understand that it is incredibly daunting. It is such a big life purchase that I have to remind myself that it should be big. It should be daunting because we're talking about hundreds and thousands of dollars. If it was just super easy, just sign here, that would signal to me that something's a little fishy, something's a little wrong because we're talking about so much money. So just be patient. It'll happen. Like I said, this is one of the biggest purchases you're ever going to make in your life, if not the biggest purchase. So just, realize that it's going to take time and the right home will come to you.
Absolutely. And ladies and gentlemen, we want to ask a favor if you're here with us today, and that is if you could help us by completing this short survey. I'm going to go ahead and put the link in the chat so you can access it. If you click that link, it's going to send you to a quick survey. It's 3 questions. It'll take you 3 minutes and essentially give you an opportunity to let us know how we did, what you think of the content today. And do you have any questions, comments, or concerns, anything that you want to let us know? We read through every single one of these feedback surveys, and we take that into consideration as we build new content, new chat labs, new things to present to y'all. So hopefully you're able to please help us out, submit that survey, and we would really, really appreciate it.
Thank you, Zane. We also want to invite you to connect with a financial coach. Like we've mentioned several times during this process, financial coaches can definitely help you and kind of guide you in the right direction, even if it just means taking a look at that credit, seeing where you are. If you want to come up with a savings plan for that down payment, financial coach can help you do that. So we encourage you to make an appointment. They're 1 hour long appointments. It's one-on-one with a financial coach. It's just you and the coach talking about your specific needs. They're conducted virtually, so they're via phone or Zoom. I say that about 90% of my appointments are via phone, but they can also be via Zoom if you prefer that. They're typically 1 hour sessions. It doesn't mean that you need to take the entire hour if you don't need it. Some folks take 20 minutes, some folks take the entire hour, some folks make several appointments. So it's whatever you need. We are here to serve you, and it's free. So you can always capture this QR code on the screen or visit the link that Efrain has posted in the chat as well.
Awesome. And we have no upcoming charlas for the rest of this month, y'all. It's a special month. We have the holidays next week. So we just want to let you know, everybody have a wonderful holiday break. Hopefully you're able to enjoy some time with your loved ones. And we will be back in December for our last month of the year and also our last month of financial education of 2022. But in the meantime, I would love to just tell you about MyMath. So MyMath is our great mobile app that Math has developed. We like to call it like having a financial coach in your pocket at all times. I went ahead and dropped a link in the chat box for you to check it out and download. It's an awesome app, y'all. If you're interested in learning about things such as credit, savings, how to develop a savings plan, how to start your own business, how to start financial recovery. A bunch of really good information is packed in. There's some amazing tools as well. So if you're interested in learning more about financial education and preparing yourself, this app is a great place to start. Hopefully you're able to download it, use it, and let us know what you think.
We also want to invite you to stay connected. We have our web address here, which I think is the most important link that you could possibly visit out of all of these, because there you can connect with a financial coach. You can sign up for a charla or Finet event. You can learn more about our products like lending circles. You can pretty much do everything from our website. So if you learn anything, it's missionassetfund.org. We also invite you to email any questions about any of our programs to programs@missionassetfund.org, and someone will get back to you with an answer for those questions. And of course, we invite you to follow us on all of our social media like Facebook, Twitter, and Instagram. These charlas broadcast over Facebook if you're not able to register for some reason, and we always provide valuable information on Twitter and Instagram as well.
Awesome, y'all. So before we cap off today's charla, we have one more poll that we would appreciate everybody just participating in this. And that is, after participating in this event, what is one action step that you commit to taking? So what's one thing that you say, hey, you know what? I learned something new today, so I'm going to go ahead and apply something I learned. Or maybe, hey, Alex made the great pitch to participate in a financial coaching appointment with the coach, so I'm going to make an appointment to participate with the coach. I want to attend another one of these Math Finet events. I want to share this information with family and friends, or I want to connect with some of the community resources that were shared in the charla. So if you could do us a favor and just let us know, hey, what's one thing that you want to commit to doing after participating in this charla? We would really appreciate it. And thank you so much to everybody who participated in our polls throughout this charla financiera. We really appreciate it. Great. I think we're good to go, Alex.
Perfect. And now is the portion of the charla where we open the floor for questions. This is the point where we disconnect from Facebook. Thank you to everyone who was watching us on Facebook Live. If you would like to stay next time for the question and answer portion of the charla, we encourage you to please register for the Zoom session so that you can stay for this part. And to our Facebook folks, we'll see you next time.
Thank you so much, y'all.
And for the folks who can here today, if you have any questions, please feel free to post them in the chat or in our question and answer box, or simply take yourself off mute. We'll give you guys a few minutes to see if there's any questions. We'd be more than happy to answer.
And if you don't have any questions, ladies and gentlemen, but we highly encourage you, if you want to ask the questions later, you can reach out to us, or you're more than welcome to make a financial coaching appointment with any of our amazing financial coaches, and you can ask all the questions that you would like in there. Okay, Alex, I think we're good to go.
Alrighty, thank you guys for being with us here today, and we will definitely see you next time. Thank you, Efrain.
Thank you so much, y'all. Hope you have a wonderful day. Please take care, and we'll see you next month for our next editions of our Charla Financieras. Please take care.
Bye-bye.